We have what we can definitely say that the should hit the fan. We are in the middle of a breakdown. I'm tempted to enter a short in here on this pullback, and I will. Everything above the window high.
Up 5%, I'll say only because we had been up at one point like 10% earlier to 119. Right now, 112.80 a barrel, and we're looking at WTI around $97. As Danny said, that spread has really blown out. But you can look at some other crude contracts and see even bigger diversions there. The U.S. 2-year yield now up only 7 basis points at 384, 385. Makes the move look tepid compared to what we saw in the U.K., where 30 basis points was what we saw at the front end of the gilt curve?
34 in the UK right now. It's getting helped out by the ECB, ironically enough. That was divined to be more dovish because they're also flagging growth risks alongside of that of inflation and just saying that they're data dependent. They have no set path, and that's helping to bring rates back in.
Joanne Feeney is Advisors Capital Management Portfolio Manager and partner. Jan, what do you make of the growth outlook? I think Secretary of the Treasury, Scott Bessent, this morning on Fox said we could still see 3% growth in the U.S. economy this year. How quickly does oil have to come down for that to work out?
Yeah, hard to tell, Matt.
There you go. Crazy shit. Tax is falling. We're gonna have a rebound here. Let's see what happens. Essentially, we have what is now a doji candle, but it looks like Dow Jones wants to go up. Looks like a liquidity grabbing here. Might go for a long. I don't know about the opens here, but it seems that the strategy with the first fake out would also be relevant for Dow Jones so far, in recent days at least. So I will avoid the first entry. Except here, yeah, this was 100. Yeah, this one wasn't this part. This one was genuine entry. So 1 and 5 and 2 and 5. As I said, Dow Jones is less of a devious motherfucker. This one, if you entered, okay, but this is Dow Jones. Hold on. Okay, it's not enough. Go back to Nasdaq. Liquidity is low. Oh no, okay, it's looking at the wrong place. So fake outs. That's not even 50, so that's, I consider this that was a shit day. I don't think I did hard to say. This one 90 pips. Okay, that's no. Oh, it was follow. There was a fake out here, definitely. Yeah. And then here, definitely. So it seems that the majority of entries would be better off if we just waited for the second entry. But this will be notified that we're double. Ripple fucking fake. Had you entered how on this one? Let's see what it does. Nasdaq and DAX is going up. Yes, Nasdaq is going up. Just lost my second item position here. Needless to say, we got chopped in here, so it was brutal. VIX is going up, so you'll be looking to enter a second position in the 30. All right, Nasdaq is climbing up. No, DAX is climbing up. So is Nasdaq. Interesting. Interesting. Now it's important to mind the context. We are at the major support. This zone here shows 1, 2, 3, and the fourth time we need the prices out. So hold on, if you go back into the past, you could argue that this is even more. Not exactly so. Yeah, this is too far away. But then here, so you can see here, this is a major support area. Are we gonna lose it? Who knows? But so far, these were lower and lower. Like yeah, it's a breakout and going long. died. See, all the moving averages are sort of um, combined. We have the, oh no, sorry, because this is the 50 simple moving and this is the EMA. Okay, so that doesn't much difference. The VWAP, which is quite important, is over here, so quite close to the moving average. It means that the volume was fairly evenly distributed so far. Doesn't matter because we were in the overnight range. The 500 SMA is way up here, which is natural because we had just experienced a large drop. Well, let's see. I think whatever the long here is, it should be short-lived. I wouldn't expect it to go very much into a recovery territory. But again, we're in this major support here. So I would say that, we're gonna have some reaction. Last time it bounced in here. It bounced over 500 points. This one was, it's a bit of a fake bounce because it was essentially just a rollover. So it looks like a bounce in this CFD view, but if you roll over to a different futures contract, it might be different, right? At a different point in time. So essentially, what happens right now is we just have this slight rebound here and then a move down. And if we took this price, it would be already below the support zone. Um, I'm not sure if this is what everybody sees, but that's the problem with brokers in general, that you have a CFD instrument which is priced based on different futures, so people are looking at different charts, and then even that itself can cause different interpretations of what's going on. For now, it's just going to be a simple breakout. Let me just look at the. So Dow Jones is up, and I would say let's maybe try and sell it here. Oh, that entry sucks. Okay. The stop is above the VWAP. VWAP would be like a second barrier for us to get protected. See if the Nasdaq doesn't look like it wants to go, but it tries to push. I think I'll be looking to take profit at 100 pips. Right at the VWAP. Oh, that will be so nice. Somehow I don't believe it, but Dow Jones is falling as well, just ever so slightly. Sorry, going up. And now we're even. Oh, That just hurts. Hmm. Let's check the news. Euro USD. Yeah, we have Lagarde speech right now. That's more important for DAX and Euro USD.
The Governing Council today decided to keep the 3 key ECB interest rates unchanged. We are determined to ensure that inflation stabilizes at our 2% target in the medium term. The war in the Middle East has made the outlook significantly more uncertain, creating upside risks for inflation and downside risk for economic growth. It will have a material impact on near-term inflation through higher energy prices. Its medium-term implications will depend both on the intensity and duration of the conflict and how the energy prices affect consumer prices in the economy. We are well positioned to navigate this uncertainty. Inflation has been at around 2% target. Longer-term inflation expectations are well anchored, and the economy has shown resilience over recent quarters. The incoming information in the period ahead will help us assess how the war will affect the inflation outlook and the risks surrounding it. We are closely monitoring the situation, and our data-dependent approach will help us set monetary policy as appropriate. The new ECB staff projections exceptionally incorporate information up to the 11th of March, a later cut-off date than usual.
As well.
In the baseline, headline inflation is seen to average 2.6% in 2026, 2% in 2027, and 2.1% in 2028. Inflation has been revised up compared with the December projections, especially for 26. And this is because energy prices will be higher owing to the war in the Middle East. For inflation excluding energy and food, staff project an average of 2.3% in 26, 2.2% in 27, and 2.1% in 28. This is also higher than the path in the December projections, mainly owing to higher energy prices feeding into inflation, excluding energy and food. Staff expect economic growth to average 0.9% in 26, 1.3% in 27, and 1.4% in 28. This implies a downward revision, especially for 26, reflecting the global effects of the war on commodity markets, real incomes, and confidence. At the same time, low unemployment, solid private sector balance sheets, and public spending on defense and infrastructure should continue to underpin growth. In line with our monetary policy strategy commitment to incorporate risks and uncertainty into our decision-making, staff also assessed how the war in the Middle East could affect economic growth and inflation under some alternative illustrative scenarios. These scenarios will be published with the staff projections on our website. The scenario analysis suggests that a prolonged disruption in the supply of oil and gas would result in inflation being above and growth being below the baseline projection. The implications for medium-term inflation depend crucially on the magnitude of indirect and second-round effects of a stronger and more persistent energy shock. We will follow a data-dependent and meeting-by-meeting approach to determining the appropriate monetary policy stance. In particular, our interest rate decisions will be based on our assessment of the inflation outlook and the risks surrounding it, in light of the incoming economic and financial data, as well as the dynamics of underlying inflation and the strength of monetary policy transmission. We are not pre-committing to a particular rate path. The decisions taken today are set out in a press release available on our website. So I will now outline in more detail how we see the economy and inflation developing, and will then explain our assessment of financial and monetary conditions. Looking at the economic activity, the economy grew by 0.2% in the fourth quarter of 2025, driven by stronger domestic demand. Households increased their spending as real income rose and unemployment remained close to its historical low. Construction and housing renovation strengthened, and firms invested more, particularly in areas such as research and development, software and databases. Growth was no longer weighed down by net exports as it had been in the previous 2 quarters. It was underpinned mainly by services. Staff still see private consumption as the main driver of growth over the medium term. Investment should also continue to grow, with government spending more on defense and on infrastructure, and firms increasingly investing in new digital technologies.
Going up. Okay.
The external environment remains challenging, including in light of volatile global trade policies. The war in the Middle East is disrupting commodity markets and weighing on real incomes and confidence. This has led to a downward revision of consumption and investment in the baseline staff projections, especially for 2026. The impact would be even more pronounced in alternative scenarios with a more severe and prolonged energy shock. The Governing Council highlights the urgent need to strengthen the euro area economy while maintaining sound public finances. Any fiscal responses to the energy price shock should be temporary, targeted, and tailored. The current energy crisis underscores the imperative to further reduce dependence on fossil fuels. Completing the Savings and Investments Union is vital to fund innovation and support the green and digital transitions. The digital euro and tokenized wholesale central bank money will enhance Europe's strategic autonomy, competitiveness and financial integration, and will boost innovation in payments. It is thus essential to swiftly adopt the regulation on the establishment of the digital euro. Simplifying and harmonizing rules across the EU's single market will help European firms grow faster. Looking now at inflation. Inflation rose to 1.9% in February from 1.7% in January. Energy prices were 3.1% lower than a year ago, after having been 4% lower in January. Food price inflation edged down to 2.5%. Inflation excluding energy and food increased to 2.4% in February from 2.2% in January. The
Might be
increase
that might be
reflected
it.
goods inflation rising to 0.7% from
Wonder if Dow Jones is now
0.4%,
following Nasdaq,
and services inflation moving
or
up
are they
to
decoupled?
3.4% from 3.2%. Indicators of underlying inflation have changed little over recent months and remain consistent with our 2% medium-term target. Corporate profits recovered further in the fourth quarter of 25, while unit labor costs rose at a similar rate as in the previous quarter. Growth in compensation per employee slowed to 3.7% from 4% in the third quarter. Negotiated wage growth and forward-looking indicators such as the ECB wage tracker and surveys on wage expectations suggest that labor costs will ease further in the course of 2026, which should support the return of inflation to target. The increase in energy prices caused by the war will drive inflation above 2% in the near term. If persistent higher energy prices may lead to a broader increase in inflation through indirect and second-round effects, a situation which requires close monitoring, inflation expectations in the financial markets have moved up significantly over shorter horizons. Most measures of longer-term inflation expectations stand at around 2%, supporting the stabilization of inflation around our target. Let us now turn to our risk assessment. The risks to the growth outlook are tilted to the downside, especially in the near term. The war in the Middle East is a downside risk to the euro area economy, adding to the volatile global policy environment. A prolonged war could increase energy prices further and for longer than currently expected, and also weigh on confidence. These factors would erode incomes and make firms and households more reluctant to invest and spend. A worsening of global financial market sentiment could further dampen demand. Additional frictions in international trade could disrupt supply chains, reduce exports, and weaken consumption and investment. Other geopolitical tensions, in particular, Russia's unjustified war against Ukraine, remain a major source of uncertainty. By contrast, growth could turn out to be higher if the economic repercussions of the war in the Middle East.
Seems like we're not. That was a nice rejection. I will try to re-add here. On this rejection of the candle. See if we manage to push above. Dow Jones is holding, also poised for a breakout. I'd actually get out of this. Doesn't look good. I'm closing the Dow Jones trade. Yeah. I guess just in time, we haven't stopped out for full loss right about now. Let's see what Nasdaq does here. Can it push past the VWAP? That's a question. I'm gonna take profit in the first position. Secure the second of a stop break even. You can see the carnage of the morning. Yeah. Now, if we go back to the opening range, I am willing to buy here again. But if you go too far, then we might be looking at a reversal there. Now we're in the VWAP, so it's always dangerous. Gold is retracing. I took profit somewhere here today. See what happens further. Emissions. A poor emissions trade. Still holding. Bitcoin is holding nicely. It's like a bearish flying though. Converge flying, so careful here. VIX retracing slightly. Okay. Maybe we all got a little bit ahead of ourselves on these falls. In fact, I'm thinking of buying back DAX here. It's a pretty good place, right? I might be tempted to get in here for a swing trade. It's a view up point, so let's see what happens here. Does it push through? Wow. Whoa, 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 whoa. Let's take some buys in here. I'm gonna enter a DAX trade here. Oh, took me out. Well, that's a falling star. Mm, let's see how this candle closes then. See what happens in the view up if it breaks through. I am now looking at this level here, the moving averages in the view up. There might be some chopping here, but there's some definite momentum to the upside. Would be nice for long. If not, if there's some wicks in here, would be nice to actually go short. And so far, I mean, we're in a 3 minute bar right now, so you never know. Let's wait to see. I will wait until the end of this candle to see. And again, I still am happy to enter along at the opening range. Interesting. You see, it comes down from the 3 minute and it shows you a different picture already. So yeah, the view up is might be a barrier right now. If it pops from the view up, then we will know that this is an artificial push that is designed to just sweep liquidity and move down. The volumes are high, so there is not that much place for manipulation, right? Not that much going on. Chopping around here. The candle is about to close. If it closes like this, we might be going short. 2 wicks. That's telling. And overall in a downtrend, right? So just suspiciously unambiguous, this kind of information. I'm beginning to become paranoid if this is really there are some algorithms that are pushing the price around in such a way that the traders see definite candlestick patterns which are then falsified, and the market behaves opposite to what it normally does. 19 seconds left. We're starting to break below. I would be interested to go short here, if at all. Let's wait until this candle forms fully. I'm going short. Stop loss above the view up again, above the previous candle highs. You could see that this is something that I'm not sure that the take profit would be hit if I hadn't taken the profit manually on the original position, just barely. Might have missed a tick or two, which would be super frustrating if we now went down. But we're not. We're not flushing. Oh no. Oh no. Oh no. The take profit would be at the buy limit, of course. Might not worry about the take profit after all. Oh no. You see, that's what I was saying. Oh my god. Fake. Fake. Candlesticks. I wonder if we turn around in here. That's a 3 minute bar, so hopefully it fakes, pretends, goes back. We're right at the view up. Oh, screw you. Well, this is just bad. Okay, well, the pop is there. So we go high. 60 pip stop loss. Ah, this drops. I stop. I stopped trading. Barely anything left. Jeez. Now that's, if you look at it, that's a typical bull flag. So yeah. So my take profit would definitely now be taken. Let's look at the calendar. Data overall good. The ECB rates have been maintained, which was a positive signal. New house sales significantly lower. Wow. Mm. Okay, of course, the pullback. Yeah, I think that's it. I think that's it. I'm gonna have to pause and revalidate a little bit. And, oh yeah, screw that action. I'm not taking part of this. In this, yeah, took 100 pips. Um, and it's not gonna pull back. What does the Dow Jones do? Okay, we actually take our stop loss and return right to the range. Should be buying in here. Chance that it bounces back. But the candle is too definitely bearish to do that, so I'll pass. Ah, screw it. Ask the long stop loss. Have I been stopped out? I should have been stopped out, right? You know, but maybe this was an initial candle down side. Yeah, it doesn't look bullish at all. At all. I'm thinking, let's get the fuck out of here. Oh, it's the downside. See if we get chopped again. The longer we stay here, the worse for the bulls. So I'm saying, yeah, let's play downwards, and I'm stepping back. Today is a bad day. Need to rethink a lot of things now. So the series of misfortunate days couldn't capitalize on the moves, so not happy about it at all. Here's the sell stop. All right. Hanging back. Thanks.